What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 23rd of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about not only the continued lackluster performance in Bitcoin's price, but mainly focus in on the big FUD that's been going around here, the big concern on everyone's mind, which is potentially Binance being insolvent. This is a topic that has been brought up before, so I want to spend some time to talk about some of the newer developments and concerns, and more specifically talk about what you should probably do if you are concerned about this, and also what the broader concern is outside of Binance itself that really is going to likely weigh down the crypto sector long term. We've got a lot of things to dive into in today's video, so if you guys happen to enjoy the rambling, consider dropping a like, and outside of that as well, if you guys missed my prior review we did on Forex VPS, if you are someone using automated trading systems on exchanges like Binance or any other crypto exchange, if you are utilizing automated trading systems across Forex markets, crypto, commodities, stocks, you name it, then you guys need to take a look at that review we did for Forex VPS. I will leave it linked down below in the description. We not only have discount codes for it, but a virtual private server is essential if you guys are going to be doing any kind of automated trading, and it also does provide some benefits for those of you running manual accounts as well. So definitely check that out. I'll leave it linked down below in the description, but let's go ahead and kick off the analysis here, guys. Now, before we dive into the big story here around Binance, I want to spend some time to talk about Bitcoin. We've got to talk about the fact that price action is screaming something big is coming around the corner. And completely exclusionary of Binance here, as we'll talk about in just a moment, I want to talk about how price action tells us the sentiment of the market. Now, we can see here, for example, when back in around April towards June of 2023, as we were declining here through this kind of descending channel of lower highs and lower lows, essentially, we saw that as we came around this range at 26K, big even level, these $1,000 intervals, we tended to see a lot of buy-side pressure here where prices would usually rally for a couple days or at least make a leapfrog move of another 1K move to 27K. There was some buy-side support, and eventually, when we got towards around 25K here, we really saw prices drive all the way up to new relative highs around 31,000. Now, there are definitely different news events and stories that drive this kind of price action, but generally speaking, the sentiment and along with that, the liquidity was there to buy Bitcoin and drive it higher. Let's take a look here. Now, not only did we not have buyers come here at the moment around 31K back between June and July, that we needed them to come through in order to confirm a bull market or really drive prices higher. But outside of that as well, when we get a 5K discount from those relative highs, actually $5,500 on Bitcoin, after this flush down, the last couple days, we're not seeing any buyer interest here. Sure, prices aren't falling off a cliff just yet, but man, if you guys have looked at a chart, if you looked at enough charts throughout your trading history, you'll know that this looks like it's ready to roll right back over. There is just no volume here, no liquidity coming in. And again, I come back to this point here again of the broader concern for the crypto space of liquidity and a real, actual, story or narrative that could drive a new bull market. Not some, I gotta be honest, guys, some half-assed argument here that the halving is somehow going to save us, which is having a fractional effect on Bitcoin's price. The bigger question here is supply and demand. Are we getting more market buyers or more market sellers? I'm not here to go off of a bet that BlackRock is going to get its ETF. I'm looking at what price in the market's telling me. And it's telling me that there's not any music playing anywhere. The music has stopped. Now, I want to go ahead though, even though we do have this generally bearish narrative that we've talked about here on the channel, I want to go ahead and talk about this Binance news because my opinion on this may surprise you. I know a lot of you have possibly heard about the kind of rumors going around that Binance has been trying to prop up BNB and use that as some kind of form of collateral to borrow more credit. And, basically over the last couple of years, they really propped up the asset using customer funds. Some people as well have been spreading rumors that Binance is just generally insolvent. And that's been something that's been going around ever since the collapse of FTX, BlockFi, and Celsius, and the bankruptcy of Genesis. And while I understand at the end of the day, people may be concerned about Binance. It would be terrible if Binance as an exchange collapses, as it is such a large player in the space. And I understand, and I'm going to say right off the bat here, while we have referred people to Binance before, while Binance has been around as far back as 2017, there is no problem, and I bet CZ and many people in the crypto space would tell you the same, that if you feel uncertain about things, you can withdraw your funds. Like, just do that. There's nothing wrong. You could have done that for multiple months to years now since the exchange has operated. Get your funds off the platform and like hold it in self-custody. I have nothing against that, and I bet you CZ would not tell you any different. Because at the end of the day, they're an exchange. They provide services to exchange from one crypto to another to earn interest. But if you're not interested in those services, you're welcome to leave from the platform, right? And I wholeheartedly would stand by anyone who would say, not your keys, not your coins here when it comes to centralized exchanges in this environment. That being realized, even though I'm generally bearish on the crypto space, I think a lot of the FUD here is really unwarranted around Binance. Now, I understand. Sure, they're not based in the US. And sure, Binance has done some things at the end of the day, like, they've offered some services that I don't really agree with. I'm not a big fan of leverage trading. I'm not a big fan of some of the kind of risk-on products and some of the launchpad projects they took on. That being realized, it doesn't mean that Binance is insolvent as an exchange. Just because BNB here is falling off here in its valuation doesn't mean that Binance is having to try to prop it up or that they took loans off of that base BNB. The only thing I've seen here that really has been kind of warranting some concern, or it might be of interest to some degree, is this loan on Venus, which is a DeFi protocol and the Binance Smart Chain. You think of it essentially as a kind of compound, or you could think of it as kind of a maker compound for the protocol, essentially speaking, where you can use the collateral of the on-chain currency to mint stable coins or be able to borrow liquidity. In this case, there is a huge loan here. Well, I'd say a huge loan. Yes, it is a big loan, but in the sense of Binance and in the grand scheme of things, it's not a really big deal. Of around $135 million of BNB as collateral here, borrowing a couple tens of millions of stable coins. I want to go ahead and just make one thing clear here, guys. We don't know who this loan is. I've heard even the people who are conspiring about it talk about it being BNB or being some exploiter. Whatever the story may be, whatever the narrative is, it really doesn't have a massive impact on Binance long-term as an exchange. It may knock down BNB as a token, which we've already, again, been calling to go to the downside here. And I hope that showcases here that we're not being paid by Binance or anything. This is me sharing my candid opinion with you guys here. Generally speaking, we've been saying that Binance, BNB, was well overdue for a correction, and it's going to have to close out the past couple of years worth of gains against Bitcoin, in our opinion, and come down and test this line of support against the Bitcoin pairing at a minimum here, because they've already cleared through the long-term line of support in its market cap terms. We already snapped through there back in June, as we've been bearish on the altcoin space for a long time, and we've essentially been right on that call. That all being realized, it does not mean that Binance as an exchange is insolvent. I will tell you right now that one of the biggest giveaways that this is probably just FUD is the simple fact that Binance, through its stablecoin BUSD, which became a prominent stablecoin in the last bull market, expanding from under $1 billion in late 2020 all the way up here, mind you, late into the bear market, at $23.3 billion on November of 2022 at its relative peak, as they essentially were forced to have to shut down their stablecoin by federal regulators, globally speaking, which have now dropped the stablecoin supply from 23 billion to 3 billion. So basically $20 billion reduction in their own native stablecoin. If Binance has not imploded yet, your odds of imploding now are relatively weak and thin. And the reason I say this here is because I'm not here to just, suck at the teat of Binance because I have some referral link to the platform. No, the reason is because Binance is a money-making machine. They make tons of money as an exchange. They are the most liquid exchange in the crypto space. I mean, there are just so many ways here. At the end of the day, this is what I joked about with FTX. We never promoted FTX here in this channel. But FTX, if it would have just done what Binance and CZ have said they've been doing over the past couple of years, and I honestly genuinely think to a large extent they have been doing, is just running an exchange business. While we may love crypto, I gotta be honest with you guys here. Exchanges make a total killing if they just do things by the books. And that's what we think Binance is doing here at the end of the day. Yeah, BNB as a token may be going down. Yeah, because the whole space is down. Like, of course, the demand for BNB is probably not as stark as it is right now and stuff. And Binance Smart Chain, which grew a lot of the valuation here for BNB, is really looking to be just another EVM compatible chain with no significant improvements outside of some scalability. Yeah, Polygon does that. Dozens of other layer 2 solutions are doing that. So what? Like, you can't just have a more centralized network that provides more transaction throughput and less nodes on the network and say that that's a reason for BNB as a token to accelerate from where it was at around $5 billion to where it is now at $33 billion. A lot of that vapor valuation is probably going to go away. And that's not me being critical of CZ or Binance. That's just the reality of the tech. So generally speaking here, if you have funds on Binance and you're concerned about any of these stories, take your funds off, put them in cold storage where they are safe, and you can always come back to Binance and utilize their services that offers some of the vastest range of altcoins and liquidity in the space, right? That's all you have to do. But outside of that as well, if you believe that BNB here is going down, I would say that at the end of the day, just make sure that you're going off of a sound thesis here. And don't be surprised if BNB whips higher here in the short term before it goes back lower. Right? We generally think that BNB here has a chance of coming down here, but this has also been a range where buyers come in the past. So don't get too short heavy when there's a lot of FUD here, when we've been calling for months here that when altcoins were back up here in their relative highs in April, back at that resistance range, that was the time to really go short on a lot of these plays. Not when everyone wants to. I'm just saying that here, guys, and I'm saying that as someone who's a bear on the crypto space right now. Like, bear in mind here, there's a reason we've been calling this for months and why we've been telling people to be more cautious on the altcoin space. It's not just BNB. Take a look at the top 10, 20, and 30 index for the crypto sector. The top 10 players have set in lower highs here back in July versus where they were back in April. Every single time facing resistance at this 9,000 point range. That's not a good look here. It likely means we're coming back down here to this line of support. And if we can't hold on that, then we're going down to lower levels. The levels in which people said were never possible, that we were ultra bearish for calling for. Doesn't sound so crazy right now. When you come back to the fundamental perspective of where the space is, which is that there are no really great killer applications right now. I've saw some people bring up Friend Tech as being an exciting application for the crypto space. Guys, this has been duplicated time and time again, and these things are not real applications that are going to actually take the space forward. The price action alone just tells us this here, that we are not ready for a bull market yet. Take a look at this is again the top 10 index. Take a look at the top 20 index, snapping through the line of support here, facing resistance here. We're going to have to see whether or not we can reclaim that, because if we can't, if this isn't just a deviation, then we're coming back down here. Come back to where we were back in December 2022, or where we were back in June of 2022, over a year ago. Crypto 30 index, pretty much same picture here, looking a little bit stronger, or at least more consistent that this could be a long-term accumulation range. We'll have to see. We might have to come down to more capitulative lows. We might wick here and give ourselves a good entry point. But generally speaking, I'm gonna bring you guys back to center here, right? This is why we remain bearish, but also at the same time we can be passive enough to say, the Binance FUD doesn't have enough substantial evidence yet. This is the chart you guys need to be focused on right now. If you are looking at altcoins, if you were looking at exchange volume, if you were looking for kind of, again, a kind of risk-off mentality or risk-on mentality to know whether or not to get long or sell crypto, this is the chart here you need to see. It is the chart that people loved to point to back when it was going up between October and January 2023 and loved to ignore when it crawled right back down and looks like it's ready to break to new lows. And that is global liquidity. I'm going to say it for probably the millionth time here, guys, because it is so true. We cannot say that it's time to buy the dip every single time when we had global liquidity growing, right? When the Fed and other central banks would always come to the rescue. We can't preach that message, which is true, but also ignore the fact that when liquidity is doing the counter opposite, when it's not just sitting still like it was between August of 2021 to March of 2022, that alone would already be enough of a concern. But if liquidity is starting to contract at such a stark amount here in the near term, just back from April here by over $2 trillion, and if it keeps at this pace, that's going to be another $2 trillion here at a minimum by the close of this year. If the Fed and other central banks keep at the current trajectory that they're going at. We cannot sit here and say that Bitcoin is just going to moon and skyrocket. We cannot say that equities are just going to keep climbing just because AI, all these narratives that are going out there that are unfortunately trapping so many good-hearted people who want to make a living, who want to hedge against inflation, who want to protect their money. And also, to be honest, those good-hearted people at the end of the day can fall victim to narratives. They can get caught in greed and make the same time-tested mistakes that people make in bear markets. For those who ignore the fact that we are going through our dot-com bubble moment here for crypto, and essentially what I mean is the tail end of that, the bear market following the dot-com bubble, if we are ignoring that, guys, unfortunately, so many people will find that buying at a 50, 60, 70% dip will lead you losing another 30, 40, 50% on the downside because they don't understand just how much of a difference it is between a 50% decline from top to bottom, a 70% decline from top to bottom, and even an 80 to 90% decline from top to bottom. A huge difference. And we've talked about this for months as the dollar is continuing to gain strength here. It's clearing through all of its near-term lines of resistance since back in November of 2022. And it looks like we're ready to start popping up higher here to our short-term target of 106. That means liquidity is contracting. Dollars are getting more scarce. The Fed is going to continue to tighten here whether people like it or not. And bond markets have been signaling that here. We pointed just the other day here. We take a look at the US 10-year yield, right? Continuing to check up right back up towards those prior highs. US 20-year yield coming up here as well towards this range. I don't care so much about the day-to-day move. It's down a little bit here. Generally speaking, since back in April, while people chose to ignore global liquidity, bonds are paying more and more of a rate here. And if that continues to climb up as a signal here that the Fed is going to continue to tighten, it's going to do two things. One, it's going to cripple the economy more as the cost of credit is getting more expensive. That is going to weaken economic results, consumer activity, and broader GDP. But outside of that as well, in the asset side of things, we now have an asset that is guaranteed and backed by the world's largest government and military, right? I know people, we like to bash on the U.S. I come from the U.S. I have my criticisms of my own country. That being realized, or more specifically, the government that runs it, that being realized at the same time, just because we may feel that way, the dollar is the world reserve currency. Bonds are essentially the asset that's utilized in the Sharper ratio, which is the risk-free rate of return. So essentially, if that risk-free rate of return is 4.5%, and possibly even heading up here soon in the next couple months, sometime this year at 5%, and equities are not looking like they're really going to kick off new bull market, what's your incentive to go long on equities? The risk incentive to go long equities right now is at its worst level in over 20 years, right in alignment with how it was back during the dot-com bubble during its bear market. I'm only here to let you guys know that if you are chasing NVIDIA into its earnings report here later this afternoon off of the narrative of AI, I pray for you here because it could go up, sure. NVIDIA could gap up, maybe have some good results. But I got to tell you guys, man, if you look at the data on AI right now, which is really, I think, the last remaining narrative here. We've seen how BlackRock shares, Wall Street is not buying the guaranteed BlackRock Bitcoin ETF. We have seen the Bitcoin bank run did not work out. That was a complete lie. If you look at stablecoin liquidity, I'm trying to think now. I mean, the BRICS, announcement, the dollar is stronger than when the BRICS narrative was being preached around, that the dollar was just going to collapse immediately. So all these narratives have fallen flat. The China reopening, and China and Hong Kong news around institutional trade, that was going to save and start a new bull market. That did not show up. We pointed it out for what it was. It was a sign of desperation that essentially Hong Kong and China are looking for any means to save the financial core of Hong Kong and trading activities and trading volume, which generate fees and revenue for those companies. Because Chinese stocks are dead. The China recovery has failed. All of these narratives have fallen flat. The inflation is over argument, I think, is done with. We are going to continue having to raise interest rates and tighten the balance sheet because inflation is going to continue to rebound. You guys will see it here over the next couple of months. I guarantee that there is a high probability we are going to see inflation coming back higher, especially with the base effects of energy reductive prices starting to no longer and positively impact inflation to the downside. And then it comes back here again to AI. If AI can save us. And with ChatGPT and the broader AI applications seeing less traffic over the last 2 months, already seeing declining growth rather than just holding out at its current growth trajectory. I'm not saying that NVIDIA can't meet on its revised revenue for this quarter, but I'm looking towards the forward revision? What is NVIDIA expecting for the next couple quarters? Next year? Are they still maintaining that demand, or are these lagging impacts? Time will have to tell here, guys. But I think we're sitting on the right side of the camp here. We have been one of the few channels who have been constantly calling for this. And I ask that if you guys have made it this far, and if you enjoy this kind of content, that you drop a like. It's one of the greatest ways you can support the channel. It supports us in the algorithm. You guys watching these videos throughout, from beginning to end is a huge benefit for us here on the channel. It helps us to get the word out, get this quality content out. And I hope more than anything, guys, it provides value to you all as individual traders and investors. Some of you may be institutional investors as well, I don't know. But we've got a whole range of people from all across the globe. And I'm so thankful to have you guys here. And it's why I take my job so serious when it comes towards letting you guys know when I really feel like it's time to get risk on and when it's time to be risk off. And now it's time for the latter. Irrespective of any potential FUD on Binance, irrespective of whether or not there are some altcoins that may be doing something cool, right now liquidity is not there. And a lot of the fundamentals are lacking in this space. Crypto as an industry is going to enter, and I think, into a lost year where we thought it was going to be a new bull market. Not us, but a lot of the sector thought it was going to be a new bull market. And we've got another year, I think, to really sit back and think, man, maybe we haven't learned our lesson yet. Maybe we need to fix some key things, and we need to really figure out how we're going to make crypto a global asset class, because I don't think we're ready yet. And I think many of you out there may agree with me on that. But it's my opinion at the end of the day. You can take it with a grain of salt and do your own due diligence, guys. Thank you all so much for listening to me ramble today. Again, if you liked the video, consider dropping a like. And until the next one, I'll see you guys on the video next Friday. Take care, everyone.